Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/the smattering, to get access to the 10 best stocks to buy right now. Plug Power stock is up 31% this year. And if you look at it since 2019, 2020, it is up an absolute mammoth amount. Here's the thing. If you look at the long-term picture, it's an absolute cash burning machine. I'm Jason Hall. This is The Smattering. And I'm here with Tyler Crow, and we're going to talk about why we think you should be selling Plug Power stock right now. Hey, Tyler.
Jason, there's few things I like to do more than dump on bad companies. And Plug Power, I feel like we're just going to have a layup line here.
Here's the thing. I'm going to say this. I own shares of Bloom Energy. I think hydrogen is going to continue to become more and more important in providing energy all over the world. There are tons of applications where it makes sense. The cost of producing it from renewables as a zero emissions fuel continue to get cheaper and cheaper. I believe that hydrogen is going to be an important thing. I just continue to look at Plug Power and see a money burning business that has really only done one thing exceptionally well in its more than 2 decades of existence. And that's paint the picture of some great future that it's going to be involved in, use that story to raise capital, and then incinerate that capital in its operations, wash, rinse, and repeat.
I can remember the first time that I heard of a huge Plug Power kind of price spike and why everybody was going wild for it was, I think it was maybe 2014. They got a large orders both from Amazon and Walmart at the same time for what they were calling, their Gen Drive fuel cell powered forklifts. Basically, it was a way of taking propane and battery powered forklifts and making them better through fuel cells. Stock went to the moon as a result of that. Those couple of news releases, which management immediately translated into stock sales to raise cash. Subsequently, ever since over that time, they said, oh yeah, we're going to use this cash to invest in the business. We're going to grow. And by 2015, 2016, we're going to be break even on an EBITDA with an S on it, because it's like we're going to back out stock-based compensation too. And on that, we're going to be break even, not even profitable, just break even. Well, that was 2016. We're 6 years later, and we're still in the same situation. The company has continually issued press releases of all the things that it's doing in the world of hydrogen and why this new strategy that they're taking is going to be the one that makes it work. Now it's not just hydrogen, it's green hydrogen, and we're going to manufacture green hydrogen through electrolyzers, and we're going to build out these plants. It's the same story investors have been told again and again and again. If you have any intention of buying this and holding it for a long term, there has been zero proof that the operations of this business is going to translate into a profitable continuing business that isn't wholly reliant on the issuance of stock to fund whatever is going on.
Even as we've seen revenue increase, and it has increased over the past few years, we've seen its cash and operations burn. They've just built a bigger incinerator, I guess is the best way to describe it. This is a company in more than 2 decades that's never generated a single positive dollar of operating cash flow over any financial period of its existence. And maybe one day, Tyler, I'm going to be the optimist here. Maybe one day, all of the things they've talked about over the past 3 or 4 years actually do lead to an economically viable business that generates positive operating cash flow. But I will tell you this right now, until they prove that that's a reality, this is an uninvestable business, and I think investors should stay away.